I'm Deepesh Patel, editor at Treasury Payments. Today we're at the Commonwealth Summit held in Namibia, and I'm delighted to be joined by Neil Shonhard. Neil, welcome.
My name's Neil Shonhard. I'm the CEO of a company called Monetago, and we specialise in building digital infrastructure that de-risks trade. I'm from the UK but based in Singapore.
Thank you very much. So tell me a bit about Monetago. What do you do?
So we build national level infrastructure that de-risks trade and finance transactions. The benefit of that being that de-risks trade finance ecosystems, promotes more liquidity, that then leads to economic growth as an accelerator through de-risking of trade. And we've had a lot of successes in places like India and Singapore, and now working with Commonwealth in places like South Africa and Mauritius and further afar. So yeah.
Thank you very much. So let's talk about the Commonwealth with respect to Africa, because I think this is the first time this conference has been held on African soil. Why is Africa relevant to the Commonwealth?
The Commonwealth's made up of 56 countries. 19 of the Commonwealth member nations are in Africa. There are 55 countries in Africa, and 19 of them are Commonwealth nations. That's about a third. So, and also a very important block of countries for the Commonwealth in terms of trade. And Africa represents a very important block of countries for the Commonwealth.
Thank you. And why is trade relevant to the Commonwealth?
So across the Commonwealth itself, the statistic is about 80% of businesses are MSMEs. Actually in Africa that number goes up. There's a great deal of perceived risk, particularly in Africa in terms of trade and finance. So if we see sort of exponential growth of the SME liquidity in Africa, we'll see a great deal of economic growth across the Commonwealth as a whole. Mm-hmm. The intra-Commonwealth trade growth statistic is they wish to have $2 trillion of intra-Commonwealth trade by 2030, and Africa is going to be a huge part of that.
Thank you. So we've talked about access to finance and SME liquidity throughout the day today. What can we really do to close those market gaps? Because Africa holds, one of the largest burdens of the off-cited trade finance gap.
Indeed. So, as mentioned, the perceived risk of financing people from small businesses in Africa is a really big problem, not just on a Commonwealth level, but on an Africa-wide and Afrexim and African Development Bank level is something they're all trying to tackle. So if we can de-risk that sort of sector, we'll see economic growth and literally hundreds of millions of lives affected for the better.
What is the value of invoice and trade registries? How do they work and what problems can they solve?
So we'll start with how they work. A common narrative right now, both at a World Bank level, on the multilateral development banks level, and even today in the Commonwealth discussions we've heard, is that digital public infrastructure is key to promoting trade growth and sort of liquidity. Now, what we talk about as invoice registries or digital public infrastructure is all one and the same in many ways. Having a tool at a national level that can pull transaction information to then do analytics to then prevent fraud promotes liquidity by de-risking sectors or de-risking trade or de-risking a country. So they have huge benefits to countries and intra-regional growth as well by de-risking trade, and the knock-on effect of that is that people have increased confidence to lend. And then obviously there's economic growth, particularly or disproportionately, this benefits the MSME sector, particularly the micro and small businesses, where again, that perceived risk is at its greatest.
And can you talk about how the Monetago system has been implemented at this level? Are you able to talk about any of the results and also has that resulted in a reduction in fraud?
Yep, I mean, one of the ones I can talk about is India. I mean, it's 50 to 60 billion to micro and small businesses in liquidity over the past few years that wasn't there before. It's greatly contributed to the economic growth in that sector in India. In Singapore, we have a system that's been live now for some time. It's also catching a great deal of fraud. Places like in the GCC, and let me talk about the GCC for a minute. The Vision 2030 statements across GCC have things like financial inclusion, increased data capture, SME liquidity, economic growth narratives to most of them. And the invoice registries and the digital public infrastructure help and tick all of those boxes. Now that's great for any nation, developed or developing, and that's where, you know, that would have a much bigger impact in some emerging markets, particularly some of those Commonwealth countries. So we're working to do that, for example, in Africa and Commonwealth countries, in Mauritius and South Africa to start, and then sort of working with the likes of Commonwealth and some multilateral development banks to expand that across the continent.
What's next for the next 12 months at Monetago, and how will you measure success?
Good question. So success for us is measured in how much fraud we prevent, because what we know from our experience is that that then promotes that liquidity that isn't there before. You know, in India, I believe the statistic is that 20% more financiers register on places like the Treasury each year because they know it's a much safer liquidity tool for them to lend through because the fraud rates are so low. In places like Singapore, where we've caught a great deal of fraud, it's promoting greater use of the system and instilling that confidence in the commodity sector after some issues that they had a few years ago. The next 12 months for us is to stand up more of these infrastructures with our deployment partners we have in various jurisdictions, both global and country level deployments. One of the most recent ones was that we're embedded in Oracle's trade software globally, but on a country by country level, having both sort of commodity funds, factors, obviously the financial institutions, the banks themselves, but also the governments involved in a lot of our initiatives, creates a great deal more sort of inclusion, and the ecosystem as a whole benefits. So the aim for us is to do more of these projects over the next sort of 3, 6 and 12 months through the GCC, Africa and in Europe, in partnership with sort of the multilateral development banks, which is one of the things we're working on at the moment. Intergovernmental associations and bodies like Commonwealth and ASEAN Secretariat, who we're also working with. Let's say, yeah, those are the goals.
Thank you very much. That was Neil Shonhard, CEO at Monetago here at the Commonwealth Business Summit in Namibia. Thank you, Neil.
Thank you. Thank you.